If you want to be a mortgage broker, you've come to the right place, because we are going to look at how to become a mortgage broker in the UK in this entire content. Being a mortgage broker could be a great career. It's one that is very rewarding, and it can also be very financially rewarding as well as personally rewarding. But if you don't know if it's the right thing for you to do, you could end up going down the whole rabbit hole, doing your qualifications, studying, doing everything else, only to realize it's absolutely the wrong fit because you weren't expecting all of the kind of twists and turns. And so in today's video, in this episode, what we're going to do is unpack all of that. So stick around to the end, because we're going to be covering a real deep dive into the following things. We're going to be looking at the qualifications required as of right now. They've changed, so it's interesting to talk about that. We're going to look at the difference between self-employed and employed. We're going to talk about joining a network or going directly authorized. We're going to talk about hands-on experience to build actually up an understanding of the job, and then look at how you generate leads, a bit of a brief overview. The idea being that hopefully you have a bit of an understanding of what this career is, so you can make an informed decision, a lot more informed than I was when I got into this space. Now, my name is Ash Borland. I help mortgage brokers simplify success. I do that through strategy, I do it through content, and hopefully through confidence in showing you that this is a very rewarding career. Hopefully we're going to be able to do that for you today. Now, a little bit about me when I decided to become a broker. I knew that I wanted to be a broker because I was working as an estate agent. I remember looking and thinking, why did I want to be a broker? I wanted to be a broker because I wanted to be able to make more money. It was way more money per hour. It was also a thing that would allow me to go and build my own career. I was an estate agent inside a branch, but I wanted to be able to have a business where I could just go off on my own with a laptop, so to speak, and just be there and run it anywhere. It's a very low cost, low overhead business model with being a mortgage broker. And I also quite like the idea of the status. You know, I'd come from a performing arts background, which then led me into estate agency. And there was always a bit of a stigma attached behind estate agents. And I wanted to have that kind of financial, professional vibe behind it. That was kind of where I was at. That was kind of my situation at the time. But the issue I faced when it came to this was, how do I pass it? You know, I didn't know what to do. It all looked very kind of vague and very scary. And I also was dyslexic. So the idea of trying to pass an exam with being dyslexic, that was terrifying, really terrifying. So it was a real kind of realization for me, was that I had to fully understand the job, understand what it involved, and understand how I could fit myself within it in order to actually make it rewarding. And it really was rewarding. And I ended up obviously becoming a coach and a business coach in that space, but it was not easy. But why I'm saying that idea is realizing that if I wanted it enough, it's going to have to push and go through it. So if you are somebody that's got dyslexia or anything like that, and you're thinking it's not for me, if it was good enough for me, I promise you, you can do it too. But let's talk about how the job actually works. What are the things you need to know, which I wish I'd known when I started. So the first one is the qualification required. So this is typically called CMAP, or it is what they call CII. They're the two main ones. As of 2026, that's going to be changing. There's some changes to that, which is going to be the FESRE, which is the Financial Services Regulation and Ethics. That's going to be changing. There's content all over online, and some on my website all about that, and also content with one of my clients and good friend of mine, Charlotte Hemingway. She's got content all on that all the time. So we'll talk about Charlotte a little bit more later on. What this qualification is this is a qualification required in order for you to be a broker. It is a regulated industry. It does require you to be qualified. You can't just go out, get a job and be done. And it's quite hard to do. It's not easy. And especially as of 2026, it's going to be very, very difficult compared to what it was. Now, there are ways you can get this qualification. One is you can go and work for a company that will pay for it, which is what happened with me. I went and worked for Connells, so you can do that. They'll pay for it, but there'll be a training debt attached to it, meaning that if you leave within 2 years, usually you got to pay it back. Or you can go and do digital online studying, which is something that you can do. And if you want to do that, by the way, my recommendation for that is Charlotte Hemingway from Future in Finance. She's phenomenal. She's a fellow dyslexic, and her courses are amazing. And I'm lucky enough to be able to have negotiated a deal where you get £50 off of any course you buy with that. So that's digital learning. The other thing as well is then you have online kind of group learning. So if you're somebody that doesn't really do online education very well and you like that group feel, there are some courses available that I know that Future in Finance do those as well. You can check them out on the website. And you can use the same thing, code ASH50. You're going to get that, so you can do that. But this is one of those places that getting the qualification is the hardest bit, and it's where most people fail. And people do fail quite a lot with it. It's not easy. I failed, hands on heart. I failed the first time I did mine. And yeah, it still stings to this day, but it's part of it. It's all part of it. But you do need that qualification in order to get the job. You can't be an advisor without it. Technically, there's some wiggle rooms within unregulated services, but if you want to do mortgages for people who are buying houses and living in them, need the qualification. Which brings me on to the next point, which is deciding between self-employed and employed, or starting your own firm completely. So when it comes to being a broker and how to become a broker within this space, there are kind of three main areas within it. So you've got going self-employed is one of the biggest draws for me that I was excited about. But you can be employed or self-employed, and then you can under a firm, or you can completely go on your own. Now let's talk about the employed ones first. Self-employed was the draw, but let's talk about the employed. So employed is going to give you stability. There's not many employed roles out there. They're quite hard to find, but you can find them. It's going to give you stability in regards to like a salary, and potentially should be anyway, leads. And there should be lead flow. If you're employed and have to find your own leads, that I wouldn't be recommending you do that. Personally, it's a recipe for disaster. Most employed roles will be handing you the leads and then you just convert them, which is going to be any of the corporates, but even independents, they shouldn't really be employing people if they haven't got the leads to feed them, in my opinion. Unpopular opinion, but it's just genuinely what I think. Now, when it comes to the employed, that's kind of pros of it, is that you do get security, you do get that kind of experience, you get the leads. The cons to it though is you don't get complete autonomy. You are working for somebody else. Those clients are not your own. You're not building a client bank. Yes, you're building experience, but you're not building anything else. And you have to understand that and respect that you are building their business for them. And so you don't try and steal their clients or any of that kind of bad practice. That is the actual aim of the game. So that's very important to understand. Now let's talk about self-employed. Now if you're self-employed, you can be self-employed under a firm. And this would be, a firm is known as an AR, which is an appointed representative of a network. We're going to talk about them in a minute. But if you're self-employed under a firm, usually you're going to be what is called an RI, which is a registered individual. Oh, stick with me with these names. So registered individual is somebody who's registered under a firm. They're self-employed, but they work under an umbrella of someone else. This is going to be more common. You see this quite a lot. The pros to this is that you get that autonomy, you get the ability to, hopefully anyway, be your own boss to an extent, but you still have a hybrid of you are working under a brand, and that you do have to adhere to the brand guidelines still. So that's going to be the pros to it. The cons to it can be what I just said, which is that you do have to adhere to someone else still telling you what to do to some extent, because at the end of the day it is their business and their brand, even though you're self-employed within it. And you still have to be able to generate leads. You have to be able to self-gen. If you can't self-gen leads, it's going to be very hard when it comes to self-employed. Just flat out, really bloody difficult, okay? So that's going to be one of the first things I'd probably say you want to be looking at. Now, the next bit with this is starting your own firm, which people do, and I get this in DMs on Instagram and stuff. People will message me and say, I'm thinking about starting my own firm. What should I do? This is really hard. You can go off on your own. There's some networks out there. Networks like Connect will do it. There's a few others, not many, who will let you go out there before you have what is known as CAS, which is what you need, competent advisor status, in order to set up on your own and give advice fully authorized. Some people will let you do that, and that's pretty hard to do, and it's pretty brutal. And my advice to someone who's doing this is, if you are somebody who wants your own brand and you want that all that kind of the full autonomy and the full brand recognition, and you want to build something, this is a great route. However, you do need to know where you're going to get leads from, because you're going to really struggle if not. If you haven't got an extensive social network already, don't mean that just online, I mean offline too. So if you're like a mum who drops her kids off at school, or a dad who drops her kids off at school, and you've got a big kind of friendship circle, you can probably do quite well. If you're somebody who doesn't have a large friendship circle, when I went on my own, for example, I'm one of those guys who has a couple of like really close friends, and I worked as a broker away from where I lived. So when I came and set up on my own here, it was like crickets. No one knew me. So that's hard. It's very hard. So you got to weigh that up. And sometimes the best route might be to go, which is what I did, was I went employed under a company, I went self-employed under a company, and then I went on my own. That was the order I went. It doesn't mean it's the right order for you. The right order for you is whichever one fits your lifestyle, but that is how I did it. And it served me pretty well as time went on. So let's talk about the third bit, which is joining a mortgage network, or getting directly authorized with the FCA, going DA. So a mortgage network effectively is a club. It's a team of people. It's a network. It's a group of people and a company that's going to sit above you and the FCA, which is the Financial Conduct Authority, which is the regulator. And they will do your compliance. They will look after you. And but for that, they will take a percentage of your mortgage and protection commissions. That's kind of how it works. So Networks, there's loads of them out there. There's some absolutely giant behemoth ones like Primus and, Openwork, and very large ones out there. There's some kind of middle range ones, I would say, that are things, like HLP, The Right Mortgage, Stonebridge, these middle kind of ground ones. And there's some really small ones out there that you'll get, which are really small, but they're a little bit more independent. They may be a lot like they're just kind of, small kind of family run networks. Pros and cons to them is pros. You're going to be left alone. They're going to actually, with regards to networks, they're going to deal with the compliance for you. The cons is you still have to be beholden to them and what they say in regards to marketing and network and compliance. They're going to oversee it, and you do have to follow their rules. So they're like your boss, but they're not. It's a really weird situation. But it is a necessary, quote, evil in the industry for the majority of us, especially when you're starting out. Now, there is another route, which is called DA, directly authorized, and that's where you go directly to the FCA and you get authorized by the FCA. This is not very common and not one I normally would recommend. It's very hard to do, and it's one that I would recommend you do later down your career if you want to have that autonomy, complete autonomy. You are directly responsible for everything. But it's very difficult to do starting out, and also very difficult to do in general. So unless you are someone who's like, I really need it, 9 times out of 10, if you're watching this video of this idea of how to become a mortgage advisor, I probably would say start as you mean to go on, of like just start at the beginning with just something easy. So like you don't just kind of get it squared away. I wouldn't worry too much about that. I'm going to do more videos, and there is more videos breaking down networks and things like that. But as far as we go with here, that's the two differences. In my opinion, if you're starting out, you probably want to be going down the network route if you're self-employed. If you're employed, your employer will have been one of those two, or if you're self-employed under a firm, they'll be under that. So you don't have a choice. It's only really if you're going on your own firm, will this be a decision you need to make. So let's talk about the hands-on experience and building a solid client advice process. Now, this is the bit where I think people really struggle when they start in the industry, is how do I actually get advice, hands-on experience? And I think when you first sign out, that's the bit you should be looking at first. You should be thinking, how can I get as much hands-on experience as possible, irrespective of being self-employed or employed? And that might mean going employed first. So that's where these large companies like Connell's, like a Countrywide, like a Sequence, like an L&C, they're going to give you the volume, the reps. Now, do I think they're good companies? No, not necessarily. Do I think they're incredibly ethical? No, not terribly. I worked with them. I'm not a massive fan of them, but I started my career there, and I'm happy I did. And if I didn't, I wouldn't be doing what I'm doing today. So I don't think they're the cream of the crop, but I do think that they serve a purpose when it comes to the training reps that are needed for mortgage brokers. And most of these companies know that's what they're kind of effectively their role in the industry is. So that's fine, but you do need to get some experience. If you don't have any experience, the learning curve to be a mortgage advisor is like a hockey stick. It's going to just be crazy hard. It really is, especially if you had no previous experience. If you come from a banking role, great. If you've come from an estate agency role, it'd be okay. I tried it. I did that. It was all right. I could lean on my estate agency background beforehand. But if you're coming from like nothing, it's steep as F, like really steep, okay? Really steep. So you need to try and get as much of that hands-on experience as possible. And probably, in my opinion, for about 2 years. I really do think that, because it's hard. And if you think that the first 2 years are going to be brutal, and so learning the job is really going to give you that. And the best way to do that is, like I said, through an employed role or a self-employed under somewhere that's going to be really high volume if you can get it. But you do need to be able to have a solid advice process. Ask these people in your interviews what their process is, what their advice process is, all of those things. Speak to them. The more you speak to them, the better it's going to be. Which brings me to the point here about generating leads. So when it comes to generating leads through, like, in general, how do you do it? We need to do it through referrals, through partnerships, through marketing. All of that stuff is how you're going to do it, okay? Generating leads is so hard. Like, I actually was speaking to a new advisor, relatively new advisor, yesterday. So it's yesterday I was talking to him, and I said this exact thing was, it's really brutal getting leads. That's the hardest bit, because you're not really taught how to do that. And if you can't, you might have a great advice process, but if you can't generate leads as a self-employed advisor, it's going to be like pushing water uphill with a fork. It's going to be very, very tough. And so you need to be focusing on that on day one. And my advice to people who are self-employed, even if you're employed, if you have any desire to go self-employed in the future, learn how to generate leads. treat it like you're self-employed. That was my biggest mistake I made as a mortgage advisor, was not treating my employed role like I was self-employed. And like I said to you before, I had a real harsh reality. How I ended up becoming a business coach and marketing coach for people was because I had to learn really fast and ended up getting obsessed with it and cracked the code, so to speak, of how to do it. But it took a lot of effort to figure it out, because I didn't realize actually that as soon as I went on my own, where are the leads going to come from? Which is exactly it. And you see this oftentimes. People might be doing 100,000 a year, writing that as a mortgage advisor in Connells, and then they're like, oh, I'll do well, and they leave, and then they've got no one. Because, like I said right at the beginning of this, the leads and the clients belong to them, not to you. And so it's really important to learn how to do that. Now, how do you do that? Leverage what you have. Leverage your social media platforms. Start posting on your personal pages. Leverage the connections you have, the community you have. All of that stuff is very, very, very important, okay? They're going to be your initial kind of friends. As time goes on, within about 2 years, you will start to get some referrals built up and your name being out there, and then over time it should grow. Takes about 5 years to build up a solid lead engine when it comes to mortgages. That's the reality of that, the realistic time zone. There are some people who absolutely crush it straight away, but the vast majority of them, it's much slower, and about 5 years is that kind of stage. Now, if you enjoyed this and you want to be more of a deeper dive into everything you need to know about starting a career as a mortgage advisor, then check out this video right now. It's a big breakdown, and I'll see you in the next one. Bye.